This is our Forex blog for September 19th, 2012. And like we do most days, we use our currency meter to find the strongest currencies to buy and the weakest ones to sell. The easiest way to do that is use our sortable currency meter. And then you can sort it in any way you want. I prefer to sort it based on the hourly trend. And you can see the yen, Australian, euro, and New Zealand are the strongest. The pound, CAD, dollar, and Swiss are the weakest. The real-time trend strength is on the top in histogram form. Underneath that we have the 15-minute trend, hourly, daily, weekly, and monthly. And some days all the time frames line up. Those are easy days to trade. When one currency is strong on all time frames and another currency is weak on all time frames, those trends tend to continue, and they also tend to give you 2 to 3 times bigger wins than what you risk. In other words, if you're risking 10 pips, they typically will move 20 to 30 pips or more in your favor. When a currency is moved too far one direction, it can have a counter trend day or even 2 or 3 days. So be aware of that. You can see here that the weekly and monthly trend of the yen is down, but the real-time trend is up, and the 15-minute trend shifts up around 4. It's okay to trade that, but most of the time it's not going to continue as long as today's did. Today's just continued and continued. And if you see a lot of momentum to the upside followed by pullbacks without much weakness, usually the previous momentum is going to continue, and it does. And you can see the peaks of the strength is a lot more than the weakness. And you have 10 minutes of weakness here, 40 minutes of strength, 10 minutes of weakness here, 5 minutes of strength, 10 minutes of weakness, hour and a half of strength. Obviously, the intensity and duration is used to gauge what the future is going to bring. So the yen's the strongest. The pound was one of the weakest, and its 15-minute, hourly, and daily trend was down as of 6. Keep in mind that the weekly, monthly trend of the pound is still strong. So, shoot for smaller profit targets. I mean, that's really where common sense comes in. If you're trading against the longer-term trend, you're probably going to make less money. The odds of the trade working is going to be a little bit less. So if you want to trade fewer lots to minimize your risk, if you're wrong, that way you lose less money if you're wrong. You also, will make less if you're right, unfortunately. But the key to trading is protecting your capital and trying to add to your profits and, have your capital grow each day, each week, each month. Obviously, you're not going to have 100% winning days. Probably most new traders won't have 100% winning weeks. However, if you can come back from a losing week or two and end the month strong, shoot for positive months. So the pound was weak today, the dollar or the yen was strong. That means you want to sell the pound yen. Let's bring this up here. And the first thing to look at, let's scroll back to the beginning of the day. First thing to look at is price starts today off above the point of control of yesterday. That's the yellow line. This is where most traders have a position yesterday. And the upper and lower value areas is between the green and the red here. This is where it spent 68% of its day yesterday. So above the upper value area and the point of control, obviously we're starting the day off looking for buys. You can see, looking back at the currency meter, at midnight and 11, it was really only around 2 when the yen started getting strong. So watch the currency meter when you're trading. You can see 2 o'clock starts right around here, and from then on out it's going down. But before that, you want to look to buy. Now 2 o'clock comes, we're still above the upper value area, and you can see it stopped right at my Fibonacci profit target I did last night. And you can see it had a nice little pullback right here, or a buy signal, gave a buy right here. Because all the time frame trends at this point are up, you certainly can take that trade. I would have ignored this one because it's above our upper band. You really want a little bit more of a pullback. I'd say 15 to 25 pips on the pound yen because it's a more volatile currency. This is a little bit better buy signal right here. And, it comes down, finds support here. This is a pretty decent place to buy. Once it breaks back down underneath the point of control of yesterday, it's at this point right here around 6 o'clock where you really want to start looking for sells. You could basically sell the breakdown of this area here. Anytime a support area gets broken, and then the market goes back up to it and retests it from underneath. The support area, once broken, becomes resistance. There's now selling there. Everybody who was long from yesterday, or most positions long from yesterday, are long from 128.07. So if it breaks down underneath there, everyone who's long from the most actively traded price yesterday is now losing money. So it's going to add fuel to the downside. So this trade right here at 7 o'clock, very high odds, and this one right here is even, higher odds. And you can see it pretty much trended down, from then on out. Now, I would have taken this trade here and this one, and anytime it goes sideways for half an hour to 2 hours, when it breaks down underneath the low, rectangle pattern type trades, I like to take those. So I would have taken this trade right here. It went my way a little bit, came back up. My stop would have been above the high here. As soon as it's going sideways at a lower price, I'm moving my stop here. Now I'm only risking maybe 6-7 pips, and when it goes down again, you draw your fibs off that previous swing, and it gives you an idea where the profit target is. Somewhere between the first and second fib targets where it's going to stall. And here's our green 3.0 containment band. Probably 90-95% of the time at this level and below, it will very quickly reverse. So get out of that trade here. I'd avoid this trade right here, wait for a little bit more of a pullback. This is a pretty decent place, and then you have a nice short. Keep in mind these FX trade signals were written about 3 months ago, before we have our daily, weekly, and intraday point of control. It was before we had our digital signal processing based moving average and containment bands. And I'm redoing these signals from scratch with an emphasis on showing only the highest probability trades. And you might have a little bit fewer trades, but you should have a higher winning percentage. Let me just bring that up to show you its progress so far. Here's the CAD yen with our signals on it, and like I said, these are suggestions for trades. You can use our digital signal processing based moving average to wait for price to go above that moving average to get into trades, and that way it increases the odds a little bit. You can see here you probably would have maybe lost 5 pips, made 10, maybe lost 3, made 10, made 30. And if you use a digital signal processing based moving average and wait for a close underneath it, you would have seen these two suggestions of a short. Price is still going up. It goes right to the 50 level, 80-50, and it breaks down right here, and you're short, and you would have avoided those two losing trades and had a win instead. Also, note when a currency, this one goes down 1 time, 2 times, 3, this is a 4th wave down, you're going to need a deeper pullback. Draw your fibs off the last big move down from here to here, and this is a 38% Fibonacci pullback, 50 and 62. You're better off waiting for at least a 38 to 50% before you sell. So you would ignore that signal just because it didn't pull back 38%. It's very hard to get a computer to accurately draw fib levels, and so therefore these signals are not going to use fib levels. But if you just simply draw fibs, and wait for the farther down it goes, the more likely it's going to make a 50 or 62% pullback before it continues. At the beginning of the trend, first we were in an uptrend, and then it broke down. At this point, it's in a confirmed downtrend. If you drew your fibs off that last wave from here to the low, notice this was a 50% pullback, and that's why the trade worked. Then it went up and found resistance at the 62% retracement. Our other signal, which is completely different than the fibs, gives a sell signal here. And this one led, it fell from 60, and look where it went, right to the pip at the 1.32 fib target. So if you use our tools and our Fibonacci's together, you will increase your odds. You avoid this trade. You might have taken the second trade here and lost 5 pips, and then you would have taken the third trade and made 15, and you would have taken this trade and this trade because they made a decent sized pullback. And that's really, what it comes down to. The simple things like that can be used to increase your probability and pretty much take every pip out of the market in many trades by using the fib target for your exit.